Okay, Steve Reed in Chicago after the USDA March supply and demand report. As always, the USDA has a little bit of surprises for everybody. I think the big thing in the corn market was they lowered the corn carryout to 21.27 million bushels. This is due to a 175 million bushel increase in exports and a 50 million bushel increase in ethanol. So corn market's up about 6 cents. Again, we're going to grind higher with these numbers into farmer selling, but it puts a little bit more emphasis on how much acres farmers plant in corn this year and what kind of yield we get. If we get a below trend yield, that'll bring 18 and 19 carryout down and probably support corn prices to a little bit higher values. Over in the beans, they put the carryout at 555 versus 530. They lowered exports 35 million bushels, which is probably in line with the trend, but they raised crush only 10. So I think a lot of people would say that let's see how the logistics go in Brazil. Let's see what the final Argentina crop is before we start trading a 555 U.S. soybean carryout. And I think the big thing is 18 and 19. If we start seeing bigger exports during that time for U.S. beans, we could actually see a lower carryout, even if acres are higher. As far as wheat is concerned, they raised the carryout in wheat to 1034 from 1009. That's due to a 25 million bushel drop in exports. South America, the Argentine corn crop is now 36 million tons versus USDA's 39 in Feb. The beans 47 versus 54, and there's some numbers that are lower than that. And the Brazil corn, 94.5, that's not much of a change. People are trading a number between 86 and 88. And then the beans, they did increase the bean crop to 113, up 1 million tons from their February estimate, and some people are a little bit higher than that. So corn up 6, beans up a penny, wheat's unchanged. I wouldn't necessarily chase the corn market, but I think the main thing is that we need a good crop where prices will go higher in 2018. Beans, I think the market's going to be a little bit afraid of the fact that we've got a 555 carryout, but I think the market eventually will realize the carryout might be a little bit lower than that. So we'll just kind of watch the spread, like July to November bean spread. If it starts gaining in value, then we know that demand is stronger than what the USDA is saying. If it starts losing in value, we know that the supply is going to be burdensome on prices. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.